We believe that it is a signal that we feel that our stock is undervalued.
Today, we're diving into a smaller gem in the dry bulk shipping industry that you may have heard of before, Safe Bulkers, ticker symbol SB. This profitable shipping company pays a dividend and is primed for long-term growth. First up, let's talk about the industry. This is a very capital-intensive industry with expensive costs to maintain and purchase new vessels. On top of that, market conditions are cyclical with very long cycles. It is not uncommon to see short, strong bull markets followed by long, drawn-out bear markets, which means being flexible and capitalizing on strong markets is essential to survive as a successful marine shipping company. The global dry bulk shipping market is set to explode from $35 billion in 2020 to a projected $100 billion by 2027. Safe Bulkers is well placed to ride this wave of growth thanks to its strong financials, young fleet, and smart management. Compared to industry giants with market caps over 10 times that of Safe Bulkers, this smaller player has a ton of room to grow. Their strategy is consistent fleet renewal and sustainability efforts that make them more efficient and adaptable to changing market demands.
Within our last presentation, we have almost concluded the environmental upgrade of our fleet, which basically roughly contributes to a 10% reduction of fuel consumption, 10% increase in energy efficiency, and 10% reduction in CO2. So also this represents another premium in our charter hires when we go out in the market and charter a vessel.
They are consistently upgrading their fleet for younger and more fuel-efficient options, including 2 dual-fuel methanol tankers scheduled for delivery.
We have 2 orders of dual methanol ships. The methanol ships will come 2026, 2027. They basically target the next, the IMO regulation, not the EU regulation. The EU regulation, I think we can handle it through the limited use of biofuels.
Let's talk about stock performance. Since going public in 2010, Safe Bulkers has shown cyclical price movements influenced by geopolitical and market events. Speculative retail investors make up a significant portion of the shareholder base, which adds to the volatility. But this also means potential for big upside if market sentiment shifts. Institutional investors have been increasing their shareholdings, such as Michael Burry opening a large position recently. Safe Bulkers has shown a history of consistent returns, with a slight dip in 2023 after a strong 21 and 22. 2024 has been another year of steady growth primed to continue into 2025. They're currently trading at a price-to-sales ratio of 1.21 and price-to-earnings ratio of 3.9, both at 52-week lows. This low valuation is typical in a cyclical industry, but it also could signal potential undervaluation.
There are several mechanisms that contribute to the good performance. First of all, the performance of the company is related directly with the performance of the charter market, but also from time to time we take advantage of certain market conditions in order to book charter hires for longer periods. The second point is that we have sold older vessels. We have taken delivery of several new builds. The new builds are by 30% more efficient. They're so-called phase 3 vessels, and the higher efficiency and the lower consumption of the vessels, of such vessels, is reflected in the charter hires.
Analyst predictions point to a $5.40 price target by the end of 2025, making the current sub-$4 price tag a compelling entry point. Multiple analysts indicate a buy and a hold. Another strong financial aspect of Safe Bulkers is their cash on hand. They always keep a consistent amount of cash on hand, they're financially savvy, and they leverage their debt properly for growth. This is a company with financial stability and plenty of cash on hand to cover their short-term obligations. Add to that a price-to-book ratio of 0.5 and a healthy debt-to-asset ratio of under 0.5, total liabilities of $500 million is a standard debt level for this company. They have built up an impressive $1.3 billion in assets while maintaining that debt level, leaving them in a great position for any changes in market conditions.
What we have achieved until now is this 32% leverage. We believe that this is comfortable, and we feel that comfortable is whatever is between 30 and 40%. And so you may see this going, our leverage going, let's say, as low as 30 or maybe 35, 36, depending on the situation.
When looking at the shares outstanding, recent share buybacks have begun to reduce the shares outstanding after the company sustained major hardships in 2021, indicating that the management believes owning more Safe Bulkers stock is a good idea as well, which indicates strong prospects for the future of the company.
And what we believe, because the market believes differently, and our stock market is what it is, we believe that because we are a shipping company and we're not traders of our stock, we believe that there is substantial room ahead of the stock price. So instead of buying a ship, we prefer to buy a stock which is, substantially lower compared to the valuation of the company, the net asset value of the stock, as described by the market, and we prefer to buy it and invest in our company. And also, this is an additional proof that we believe in what we are doing. It's a comfortable position for our shareholders that they feel that we're investing in our company by buying the stock. And so I think that at the end of the day, we have two strategies right now. We try to pay a dividend, which is 5 cents per quarter. This is something that we have done all the past quarters. And we have done also a few buyback programs, which also benefit our shareholders and represent our view of how our stock should trade. We believe that it is a signal that we feel that our stock is undervalued. Of course, the price of the market of our stock is reflected in the price at the stock exchange, and so we have to live with that. But we think that by investing in our stock, it's a good opportunity, and we can also take the benefit as a company.
Of course, no investment comes without risks. Regulatory changes around green energy could increase operational costs and are constantly shifting.
The other regulation, I think, will be, because it has a global impact, so it penalizes the global trade, not only the trade from and to European Union. It will have a greater impact, and that's why we have these two dual methanol ships.
And maintaining a young fleet requires continuous investment and stable supply of vessels, which could be a possible challenge going forward as less vessels are built in anticipation for a global shift into alternative energy resources. These are two recent new build ships recently delivered that have passed the Phase 3 emission rating. These are some of the largest, newest, and most fuel-efficient dry bulk cargo ships on the water today, which positions Safe Bulkers in a comfortable spot if market conditions shift and they're required to lean on their current fleet for an extended period of time. Leadership plays a big role in a company like this. The CEO has been steering the company since 2008. His family's been in the shipping industry since 1958. With substantial insider ownership and a focus on sustainability, management has demonstrated competence in Safe Bulkers' long-term success. So what's the bottom line? Safe Bulkers is a solid play in a booming industry with strong leadership, low debt, and a clear strategy for growth. With a healthy dividend and bullish sentiment, I will be buying this stock at its current levels. If you found this helpful at all, don't forget to like, subscribe, and let me know what you think. If you're going to be adding this to your portfolio, already have, or any other companies you want me to look into the future.